Hi, this is Peter St. Onge. Every week I grab key numbers torn from the headlines to make sense of what just happened, why it matters, and what comes next with no jargon, no mainstream spin, no agenda beyond liberty and prosperity. New episodes drop every Friday morning on my completely free Substack at profstantonge.com. Let's get started. First up, 60. That's how many countries President Trump just hit with fresh tariffs over forced labor. The new tariffs run from 10 to 12.5% and cover 60 countries, including the European Union, Britain, Canada, and New Zealand, all noted hotbeds of slavery. Trump is using a tariff authority, 301, which allows tariffs against, quote, unfair foreign trade practices, replacing another authority, 122, that allowed temporary so-called balance of payment tariffs when you import more than you export. Meanwhile, he's using another relatively obscure authority, 338, allowing tariffs as high as 50% against Canadian goods, including dairy, alcohol, and cars, including some products that were sacred under USMCA, the NAFTA replacement, in a warning shot to Canada's globalist prime minister that it is time to start negotiating on Canada's barriers against the U.S. Meanwhile, the administration has opened yet another investigation, this one under 301, into Europe's relentless attacks on American tech companies. That's after Google was hit with a $1 billion European fine for supposedly favoring its own services, which brings the tally to $40 billion in fines that the European Union has imposed upon American tech companies. They are using us as a piggy bank. So why all these different laws all of a sudden? Because when the Supreme Court struck down Trump's tariffs under so-called IEEPA, IEEPA, the administration said at the time, well, we're just going to reimpose the tariffs using other long-standing laws, some of which date from 1930. So they were running with that temporary Section 122, but that just ran out, and so now they are going to the woodshed and seeing what else might work. So the administration is now cycling through those other tools, the ones that Congress has left lying around, which include 301 for unfair trade, 338 for discrimination, 232 for national security, 201 import surges, and that old classic 122 for balance of payment. Same plumbing, different wrench, in fact, quite a lot of wrenches. Now, Trump's underlying argument with tariffs has always been that America is the most valuable consumer market on earth. In fact, America accounts for almost 1/3 of global consumption, and so Trump's thinking is access should not be given away for free. So he wants other countries to lower their trade barriers, buy more American goods, move production into the U.S., and stop using taxes and fines to raid American companies. So tariffs are the leverage, and for 30 years, Washington treated access to the American consumer as a charitable donation to the rest of the world. Trump treats this as a negotiable asset. Whatever you think of tariffs, that is the strategy. If you want to sell to Americans, America gets something in return. The next number is 0.4%. That is how much consumer prices fell last month. Yes, we are in deflation, as plunging energy prices begin reversing the war inflation almost as quickly as it went up. On an annualized basis, that's roughly 5% deflation, which is no joke. And critics, after having predicted tariff Armageddon for 2 years, and then energy and inflation Armageddon because of the war, have another dose of pie on their faces. This now puts the mainstream consensus at 0.42 and counting. So why didn't the energy shock spread through the entire economy? Because businesses always knew the war was temporary. Companies do not raise prices for temporary inflation because competitors will jump in and they'll lose market share. So that's been one of the surprises of the last couple of months. Even as energy soared at annualized double-digit rates, generalized inflation was not spreading to the rest of the economy. And this all matters for the Federal Reserve because new Fed Chair Kevin Warsh wants to establish his inflation-fighting credibility, which is understandable. The problem is that if he's fighting wartime inflation that is now collapsing, he risks hiking into a slowing economy. Now, before the war, Warsh was discussing rate cuts driven by productivity gains from AI, which he called the most deflationary technology in history. For a couple of years now, he's been pushing something he calls Robin Hood monetary policy, where he cuts rates for Main Street and then pays for it by canceling the inflation the Fed prints up when it buys Wall Street assets, hence Robin Hood. So despite his reputation as a hard money guy, he's actually been pushing easy money reforms starting years before he joined the Fed. Now, the other point here is that before the war, while government statistics said that inflation was bumping around 2% or so, Trueflation, which is a private sector alternative that scrapes about 1.3 million real-time prices, Trueflation said that inflation was running about 0.7% before the war on an annualized basis. Now, that is a level the Fed historically starts trying to create inflation because it is terrified of deflation. So if energy shock is now fading and underlying inflation is still that pre-war number, the Fed should not be hiking, they should actually be cutting. Now, given that markets currently expect the Fed to keep raising rates, if they flip to cuts, that will give a massive boost to the economy for the rest of the year, given that every point of cuts in rates are worth about 1 million jobs. So it could be a great second half of 2026. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington, the inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. Now back to the show. Next number, 5%. As how much a new study claims your electricity bill falls if the number of data centers in your state doubles. Now, this is very counterintuitive if you've been following the left's war on data centers, but the reason is power is very capital intensive, with about 2/3 of the cost being fixed capital, like transmission lines. That means adding customers actually lowers costs per gigawatt. In theory, in the long run, but according to this study, even in the short term. So think of it like Netflix doubling subscribers. Almost all of Netflix costs are fixed. They have the website, the servers, the interface, the billing. So doubling subscribers nearly halves their costs per subscriber. So it's not quite so extreme in power, but it is close with 2/3 of the costs fixed. The background here is that the left has been demonizing artificial intelligence and data centers, presumably because global warming was not paying the bills, and they need a fresh excuse to control the economy and distribute the grift with the enormously attractive bonus of controlling a technology that could rival the internet in its ability to influence voters. Now, the first thing about data centers is that they are not only about AI. In fact, data centers power every part of modern life that depends on a database or the internet. So websites, hospitals, grocery stores, banks, the military, logistics and supply chains, communications, practically everything you buy. So without data centers, we would literally not have food on these shelves. The left's attacks tend to focus on 4 claims. Data centers destroy jobs, specifically AI destroys jobs. Data centers raise electricity prices, they suck up all the water and cover up all the farmland. Last study after study is debunking these. One recent working paper from the American Economic Association estimated that AI adoption drives job growth higher in companies by roughly 25%. Now, this also might seem counterintuitive after years of the coming AI job apocalypse, but consider that when a construction company switches from shovels to bulldozers, they hire more workers because each worker is more productive. Now, AI may still hurt specific workers, especially inexperienced recent grads who have not developed useful skills or job experience, along with people of any age whose master's degrees in sociology taught them no skill beyond applying for taxpayer grants. But at the company level, greater productivity means faster growth. Faster growth means more hiring, which is a 200-year trend. Next up is water. A recent study found data centers use roughly 1/30th the amount of water as American golf courses. Keep in mind, this is to keep food on the grocery shelves and hospitals functioning, which seems like a decent use of water. Yet another study tallied up data center land use coming to 1/2000th of America's idle farmland, so-called wasteland. And finally, electricity, where it turns out AI could actually bring prices down instead of eating all the power, so you're washing the clothes with a bicycle Gilligan's Island style. Now, to be fair, it is logical that electric costs go up when you have more data centers because there's upfront fixed costs for new generation and new grid connections if the data centers are remote. But Trump has already issued an executive order requiring major data center operators like Google or Microsoft to fund the infrastructure needed, the additional power. So if they finance the new build-out, either all goes to plan, we get the AI slop and electricity bills go down a little, or the AI bubble pops and we now have tons of excess capacity that's already paid for, which would make electricity bills go down a lot. Either way, the greedy data centers are trying to make your electric bill go down. The next number is a doozy, $5,295. That's the median asking rent in Manhattan, up 8% in a single year. Now that Zoran Mamdani has launched his jihad to make housing affordable. That comes to $63,540 per year for the median apartment, as in half cost even more. Now, New York contains roughly the same number of sinners and saints as it did last year, so rents did not jump 8% because landlords suddenly got 8% greedier. They jumped because New York keeps making it less profitable and dramatically more dangerous to provide rental housing. This sent apartment listings collapsing by 16%. Apartment availability fell almost 20%, pushing the vacancy rate down to just under 1.5%. It's about one quarter a healthy market. The city already regulates rents, broker fees, tenant screening, security deposits, evictions, each rule raising the risk of renting an apartment while reducing the potential return. Now Mamdani wants to freeze rents on roughly 1 million apartments, converting them from profitable to unprofitable and chasing out the landlords. Already about 42% of New York rentals are government stabilized, and when the government forces more rentals below the return landlords could earn elsewhere, landlords eventually will go elsewhere. Some convert apartments back into owner-occupied housing so they have more space. Others leave units empty rather than risk a destructive tenant who cannot be evicted. And everybody stops building. The result is a two-tier housing market. People lucky enough to inherit a stabilized apartment pay far below market, might pay $500 or $750 for an apartment. Everybody else fights over the shrinking supply that remains. So the insiders get cheap apartments, the newcomers get to pay $5,295. Next number, and speaking of Mamdani, 20 after Democrat Socialists swept a series of blue state primaries. This is how many Democrat Socialists could soon be sitting in Congress unless Jesus himself reaches down and makes a Republican win Queens. Ben Franklin said, "Experience keeps a dear school, but fools will learn in no other. New York is learning in no other." Now, this new crop of communists is winning thanks to young white liberals, not the traditional Democrat base of blue collars and minorities. The young are going communist not because Karl Marx finally won the argument. They're choosing it because the half-socialist system we already have has broken housing, healthcare, education, and wages. In their mind, the entire system is broken. While the progressives who captured American schools have been washing their brains for 16 years, K to 12 to university, that socialism would fix it. The tragedy, of course, is Mamdani-style socialism created many of these problems in the first place. They broke housing with rent control, zoning, and green restrictions and mandates. They broke healthcare with government-protected cartels, insurance mandates, licensing restrictions, and jackpot lawsuits that you pay for. They broke college with subsidized loans that finance useless degrees with no hope of ever paying for themselves, so people are flipping burgers with a master's degree, stewing about the injustice of capitalism. So they poison the patient. Now they say, look, she's sick. She needs more poison. Moreover, these Democrat socialists are not soft, cuddly Scandinavians. Their recently passed platform calls for seizing the means of production, abolishing police and prisons altogether, opening the borders, and abolishing the presidency, Senate, and Supreme Court in favor of a national assembly. Of course, they'll say this isn't communism, it is sparkling socialism, and true socialism, as we all know, has never been tried. To which one might reply that true capitalism, meaning zero government control, has also never been tried in modern times. The difference being almost socialism produces shortages, repression, and starvation, while almost capitalism produces a standard of living our ancestors could only imagine, one that Democrat socialists are trying to throw away. A word from our sponsor. No amount of time spent learning about macroeconomics or politics can save you from the fact that our money is broken. You can protect yourself by taking full control and holding Bitcoin in 100% self-custody. Now, there's a learning curve, but it's not rocket science, and you'll be in expert hands with my friends at The Bitcoin Way. They'll guide you through the process step by step, from setting up your hardware wallet to running your own node one-on-one and at your pace. Download your free self-custody guide from The Bitcoin Way by scanning the QR code or clicking the link below. The time to become sovereign over your wealth is now. Stocks and even gold are all over the place. If you're ready to diversify, Abundant Minds makes Bitcoin mining simple, transparent, and human. You can deduct every penny thanks to Trump's big beautiful bill. It's a 401k for Bitcoin mining. Founded by a husband and wife team, Bo and Christine Marie Turner, after losing $500,000 to broken promises in the mining industry, Abundant Minds was built to protect investors. You own the machines. They make it turnkey with hosting at their facilities in Oregon. Pricing is clear with one flat monthly fee and no surprises, and they guarantee uptime so you can keep earning day in and day out. If you want easy diversification without pressure, learn more at abundantminds.com/Peter to get some of your first Bitcoin mined for free as a gift to my audience. Now back to the show. Next up, 46%. That's the share of scientific papers that it turns out did the math wrong and are therefore garbage. Believe all science. New project examined 143 social science papers for computational reproducibility, meaning is the math correct? So this is not replication, where independent researchers collect new data and see whether they get the same results. This was a much lower bar. Take the original data, follow the stated instructions, rerun the code, and see whether their numbers reappear. Turns out only half cleared that comically low bar. The researchers actually began with a pool of roughly 3,900 papers, but 97% didn't have any numbers. They are glorified opinion pieces lovingly funded by your taxes. Of all the papers, economics, as you'd expect, perform best, with roughly 72% of papers doing the math right. Of course, another way to say that is 28% of Ph.D. economists can't do math. The worst also, of course, was education, where fully 97% of papers that tried to use math got it wrong. These would be the people teaching the teachers. Now, this all matters because it means most scientific papers are garbage, closer to propaganda, given the left-wing monoculture in academia, which swings 90 to 99% left. Actually, it's worse because this was only testing for math errors. The much bigger issue is when the source data or study design is bad. Famously, about 15 years ago, pharma companies Bayer and Amgen were considering using academic research to develop new cancer drugs. But first, they wanted to test the original papers to see if they are correct. Together, they tested 120 papers from top journals. They found just 9% could be reproduced. The other 90% were garbage. Keep in mind, this is biology. Imagine how much worse it is in the social sciences like economics, given people are much less deterministic than cells. So if roughly half of academic papers do the math bad, roughly 90% cannot be replicated. And that's not even counting the 97% of papers that are essentially opinion pieces anyway. Now, this is all annoying. Given the hundreds of billions that taxpayers give to universities to, it turns out, crank out fake papers. But also because these junk studies are the entire basis of so-called misinformation, disinformation, and the censorship industrial complex. In fact, they are used in Congress as the battering ram for left-wing causes, using so-called science to push for everything from global warming to gender transitioning minors. So garbage in, garbage out, but with a tsunami of left-wing bias. Finally, 21%, that is the share of federal income tax paid by the top 0.1% of taxpayers, 10 times their fair share, and coming to an average of $3 million a year thrown into the federal leviathan. In fact, the top 0.1% pay more income tax than the bottom 80% combined. Who says that top 0.1%, roughly 154,000 tax returns, pay roughly $440 billion in federal income tax, compared to just $350 billion for the bottom 80%, as in pretty much everybody else. Interestingly, despite mainstream media disinformation, taxes have become dramatically more progressive. So in 1980, the top 1% paid approximately 19% of federal income taxes. Today, they pay 40%, twice as big a share. As in, we are, in fact, eating the rich. It's actually worse because once tax credits and government transfers are included, the bottom 80% pay negative taxes. As in, they get $1.10 in tax-funded benefits for every dollar they pay in taxes. So much for paying their fair share. Of course, it was never about fairness. It's about finding an excuse for government to seize ever more trillions and funnel it into leering centers, teachers' unions, NGOs, and contractors, along with exciting new wars. You can win elections with 51% of the vote. The rich become an endless ATM for the crony industrial complex, and 80% is a lot more than 51%. So those are this week's numbers. Tune in next Friday for the next round. Until then, we'll be watching. See you next time.